important to clarify that depends the investments and why you pursue a cross-border transaction depends by the industry in which you are. So the private equity industry or the venture capital and the industry where we invest is a very different context. For example, private equity has always been present in Italy because as Italy has been always a good investment area, geography for private equity, because traditionally there have been a lot of small and medium enterprises that are family business that are been always good target for acquisition from private equity companies, or in any case they've always been looking for funding to grow because small companies traditionally don't have easy access to money from the capital markets or from banks in any case. Different is technology. So now I've seen both perspectives. So being a private equity in an American company now investing in software, and being working for a Italian private equity investing in retail, for example, is a completely different experience. If we want to focus about software and technology now, and why venture capital can pursue targets in Italy, and why Italian companies should try to expand in the USA market, is a completely different story. Specifically, well, it's evident to everyone why small companies or technology company in Italy should try to get funding from American companies because they are the richest, is because, of course, in Italy now is very, very hard to get growth money. So in some way, to access capital, you have to structure yourself to get this money. And it is very hard for a venture capital that can invest worldwide to decide to pursue an opportunity in Italy because of two main difficulties. First of all, if you want to invest in an Italian company and the company is specifically Italian, only looking at the local market, you have a problem that company is growing, is trying to grow in a market that by definition is not growing. If specifically we talk about software, the market for technology is even more difficult in Italy than in the other industrial context. Of course, if you invest in fashion or mechanical or in other industrial sectors, it is easier. Technology is a little bit different market in Italy. The other problem of investing in Italy is that I put my money and acquire a company, but I want to exit sooner or later. If you invest in a company that is specifically Italian, local, it is difficult to exit the company with an IPO or a listing in the Italian market because it's not as developed as in other markets. And on the other side, it is difficult to find a strategic acquirer of a company in the specifically Italian. You know, there isn't a Google, there isn't Facebook, there isn't Oracle, there isn't IBM if you talk about technology. And I'm specifically focused on this because now I'm working in this sector and because of the constant, but feel free later to ask me about other sectors. So what we have found is that in any case, there is an advantage for an investor in an Italian company, that is, it is cheaper. Italy has really good opportunities because there are really good researchers that create really valuable intellectual property, and there are good talent and cheap engineers. Of course, this is not enough. So companies, for us, need in some way to structure themselves since the beginning to look to other market and expand in some way to USA at the beginning of their growth, because we need to see companies that have the possibility to grow outside of Italy and that we can exit outside of Italy. Of course, I'm talking about companies that are at a different stage of development that FAC, that had a long story, that organically can decide to pursue a growth outside. A small company and a small medium enterprise in technology that wants to grow outside needs probably funding of a private equity, but needs the experience of a private equity or venture capital to create this structure, because actually it's difficult for a company that is not organized, doesn't have an history, doesn't have the strength to become a global company initially, but in some way to be a good investment for me, you need to think about that. So the advantage that an Italian company can have in working with an American private equity and pursue an international cross-border transaction is the experience in dealing with corporate development of private equity and venture capital firms. Specifically, we invested cross-border, not in Italy, but we looked at Italy, but we decided to invest, for example, in a roll-up of IT service company in Ukraine, Russia, China, Lithuania, Latvia. Because we wanted to develop IT outsourcing business in countries that have, as I said, like Italy, good researcher talent at a cheap price. We decided to go in Russia and Ukraine and roll up this company and then merge them with a company in the USA in a way that now we have an international company. It's even hard to decide, well, now is headquartered in the USA, but at that point we created a company in which we believe, first of all, we can make an exit, so we have a business plan to make an exit potentially in the USA. That is easier than make an exit in developing market. Second, now the company generates 60% of their revenue in the USA. Of course, this happened in 4 years. So you cannot, a small company, an Italian company, probably would find hard to develop a 100 million business in the USA from scratch without corporate development or the support of a private equity firm that is enabled to acquire business and develop the business abroad. So this is for the technology side. I mean, it is evident to many of the Italian people that I meet that this is the case, because I continue to see more and more people that are trying to come here because they understand that the possibility that you have in technology in the American market are much higher than what you have in Italy. In other sectors, I think that Italy did better, probably for the experience of the people and the investors that are in Italy. For example, in an Italian private equity fund that is called Fingen, at the time we acquired, was a fund specialized in retail, and we acquired a business headquartered in London, but a global business with 300 shops worldwide. So this is the opposite. This is an Italian fund that goes to buy abroad instead of an American fund going to buy in Italy. So in sector that Italy dominates, like retail and fashion, I think that Italy doesn't have anything less than any other country, except probably for the availability of cash, because clearly private equity is in somehow related with leverage from banks. So the relationship with banks is very important. In this moment in Italy, it is difficult for local private equity to have enough funds to pursue an international strategy. But it is the reason that I described before are valid in this case as well. Of course, you want to invest in growing markets. So it's difficult now to take the decision to invest in Italy because it's not growing, as long as you don't see a very attractive price. So all the downsides result in a positive side. But actually, the multiple of a software investment or software company investment in the Silicon Valley are completely different than a possible acquisition in Italy. So of course, the context is very different. There are downside, upside. I think that I'm following now Italy and Spain specifically. So far we didn't close any acquisition in Italy. We find another barrier that probably other firms don't have, but I think it's a suggestion for the Italian companies that come here. For a venture capital and a private equity sourcing, it is finding the deal, it is expensive. So the problem that we find in these countries is that we are not big enough to have a local presence, because we still don't see, coming from Italy, a flow of deals that would justify my cost of opening an office there. So in somehow, how we view Spain and Italy is opportunistic, because until we are convinced that we can make, that we can put to work a lot of money in Italy that sustains the cost of having people sourcing the deals there, it is difficult to manage the country. I mean, it's too small yet, still, although it's growing. So I think that is very interesting. As I said, it's cheaper than here. Spain as well. I think that the fact that there is a crisis in Europe stimulates entrepreneurship in some way. So there are many more startups. There is a growth of the local venture capital business as well. So somehow something is growing. Still, as I said, private equity in other sectors than software find enough deal to justify a presence. So all the biggest private equity firms are there. Not all the big venture capital and software investors are there. They are mainly in London. So to conclude, I suggest indeed for Italian companies to immediately try to come here, to establish a contact, to show to the investor that there is an openness to USA. And of course, you need to think about structuring your company in the correct way. Of course, of this, Matteo is an expert, but you need to have a legal structure that helps the investment. You need to have a proper management of the intellectual property. It has to be owned, possibly not only in Italy. In some way, you have to structure your companies, to think about structuring your company since the beginning to be a global company.